welcome to Taking Stock. This is the show where we prepare you for the coming week and analyze the week gone by. I'm Sonia Shenoy. This week was a very interesting week. It was a week in which the markets hit that all-time high of 65.60 on the Nifty, and it was also a week where we did see some consolidation towards the latter half of the week, and the index fell about less than 0.5% by the end of the trading week. Interesting because not only did we hit an all-time high and the FI flows were quite solid, but we also had weak global cues to deal with and issues across the Crimean region as well as in China. But how do we move ahead from here? Joining us on the show today, we have KR Bharat of Advent Advisors and Sushil Kedia of CIMB to tell us how to approach the next couple of days. Gentlemen, thank you for joining me on the show today. Bharat, I want to come to you first. We hit a record high on the index, and that was supported by some solid FII flows. Do you think that good run could continue in the run-up to the elections? And if yes, is this still a buy on every dip market?
Okay, let me try and sort of marry what I feel intellectually with what is actually happening in the market. Sometimes I feel the market is smoking something. It seems completely surreal, if you ask me, because there is absolutely no economic basis for what is happening. Having said that, the market is always right. There is a serious momentum that's built up. A lot of funds which had actually given up on India a couple of years ago are coming back now and are investing reasonable amounts of money back in India. So the momentum is very, very strong. But if you actually analyze what's happened in India over the last 7 to 8 weeks or maybe even 3 months to see what's changed, absolutely nothing has changed on the ground from a macroeconomic perspective. The only thing that's changed is the politics. Today the market has discounted the fact that you are going to have a new formation in place in Delhi come the last week of May or perhaps the first week of June. The market has also sort of seemingly discounted the number of seats that the new formation is going to have, and now the market is in the process of discounting some of the new policy initiatives that are going to be taken by the new government. Now, do I agree or disagree with the market? There is no reason for me to disagree with what the market has discounted in terms of the fact that there is a new dispensation that is going to take shape. I see no reason to disbelieve the results of virtually every single opinion poll that is being published, plus or minus the usual margin of 2 or 3%. Having said that, why do I say that I believe, that I can't sort of fathom what the market is smoking? The reason I say that is because the one thing I do know with certainty, despite agreeing with the market on the points that I've just made, is that the new Prime Minister and the new Finance Minister certainly do not have a magic wand. And even if, whatever they may seek to do in terms of sort of revitalizing the investment cycle, removing the policy paralysis that we've all been, complaining about in the past, the process is going to take a minimum of 12 to 15 months. So the feeling that I get from an intellectual perspective, from a macroeconomic perspective, is that this market has run way ahead of itself. Having said that, to answer your question, I do not believe that this momentum will run away, because momentum is a very strong thing, and momentum does not necessarily listen to intellectual or quasi-intellectual arguments. So yes, I do think that the pre-election rally will continue, albeit with the kind of profit taking that we are seeing. It will perhaps ignore economic realities in India and overseas, and also the geopolitical realities that you spoke about globally. And that is going to happen. But what I would be sort of cautious about is the medium term, where I believe that maybe post-election, after the initial euphoria, if what the opinion polls are saying is correct, there will be profit taking, there will be correction when people and investors realize that the new government is going to take a good 9 to 12 to 15 months to sort out some of the problems that we are facing. So the way I see it is the pre-election rally continues, the euphoria continues immediately post-election, followed by a prolonged process of profit taking and correction, and I believe an initiation of a long-term bull market, which will probably start in the first or second quarter of calendar 2015. That's my take, and that's what I believe we will see going forward.
Fair enough. Let's get Sushil Kedia in on this discussion as well. Sushil, do you concur with Bharat's view that perhaps riding on this sentiment at this point in time could be, playing with fire? I mean, who knows whether this euphoria could last? There are some people who even talk about a post-election sell-off in the market. market. So to sum it up, how are you going to play this rally or this sentiment wave from here on?
Okay, lot that Mr. Bharat said resonates with my way of currently looking at things. And to make it, say, condensed and a little simpler, the Modi premium on the market is not going to let you comfortably do any short trades. You will be as anxious in doing short trades due to the Modi premium as you would be anxious in doing long trades due to the Ukraine or the other global macro risk factors. And the usual habit of looking at so many things in the world and connecting them together, we can't get so spontaneous. Even if many of us are reading Bhagavad Gita, we just cannot keep ignoring so much information that we are all used to. So when I'm looking at global charts where oil is looking like has begun going down, gold continues to go up, which looks like more risk premium. The dollar index is likely to be perhaps making a strong up move from later next week. It's scraping the bottom of the barrel. The euro looks like is more or less topping out. I'm talking, say, about a month to 2 months time frame. We'll cut it finer to a week. And the sort of dissonance that you are noticing across correlations worldwide, while China is close to scraping the bottom of the barrel, the DAX and the S&P 500 are going through the stratosphere. Korea and India are stuck somewhere in between. This euphemism about a new high in India, I've never believed in these new highs. Very quickly to revisit, if a new high was a logical point to buy, merely because it's a new high, the next day also there should be a new high and stock prices should go to infinity. That has never happened. And the same way for new lows. So that is just one of the things. In cutting all of this together, say quickly into our own Indian stocks context, it's a very stock-specific market. The usual advanced decline indicator that has been very badly abused. I urge anybody who practices technical analysis to do something simpler. Divide the price of CNX 500 by the price of the Nifty index, and you'll get to see the relative performance of the broad market versus the focused Nifty index. And that is not inspiring. That has not been going up. So while there are odd stocks here and there that have produced some humongous returns, but because we've been so tired and bored in the last 2 years, that this is more like, a release of our pent-up boredom, that so what if Nifty did not do too much, we still have a lot of stocks going up. No, that's an illusion. Please look at CNX 500 by Nifty and focusing within Nifty. It is, I think, the IT stocks have finally, okay, we can go sector by sector later.
Okay.